Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's video headline, I talked about it being a huge pivot day. There were two numbers to watch for. A lower close was going to signal a 2 to 3 day decline, while a close above 33.59 would signal a retest of the highs of Tuesday and ultimately move toward an all-time new high above the 33.93. Obviously, the second happened. We saw a sharply higher opening, market followed through, and we continued to trade higher throughout the session. We actually printed 33.87, just 5 handles short of the all-time high. The stage is set for an all-time new high. As I've been discussing over the past several days, what will be important here is how the market acts once we print into a new high. Now, there's a couple things that I'll talk about in the technical section. We did see the S&P cash close above the RXT number, which signals a short-term sideways to down pattern. Does not mean a top, but it does suggest that there could be quite a bit of resistance. But what I'm seeing in other areas, which I'll go into great detail here in a few minutes in the technical section, is that we're going to continue to move higher. The big news today is going to drive the market will be the unemployment claims. They're expected to show 1.1 million. If they come in under 1 million new claims, that's going to be bullish. And the big number that I've talked about over the past several weeks is the continuing claims. And I've been looking at some sources that I follow, and I'm hearing rumors that we could come in around 14 million, which would be 2 million off of last week. This was just a rumor that I heard from a source today. We'll see how it comes out, but anything under 16.1, which is where it was last week, will end up to be a bullish number. And if it comes in anywhere near 14, this is going to be construed as a very bullish number and will signal that the economy is continuing to come back online. The final thing that we need to watch today, there are about 130 earnings reports. We're getting very close to the end of earnings season. Next week, I think there's maybe 140 total for the entire week. So this is the last big tranche of earnings reports, and these have been coming in better than expected, like across the board. But remember, we're still looking back to that second quarter activity. When we come into October and November, we're going to be looking at third quarter, and that's where we're going to find out what's really going on in the economy. Prior to finding any of that information out, we're going to continue to grind forward. Originally, I thought we were going to be in this very choppy range as we came into the third quarter. So far, we're just seeing a continuation as markets continue to unfold in this V bottom. The one thing that we don't know that's happening is that the economy is unfolding in the V bottom. That's a little harder to tell, and that's why I keep suggesting that when we get to third quarter earnings and we start to see some of the quarterly reports from the economy sometime in October and November, we'll start to get a really good feel for things. Remember, there's this thing called presidential election coming up as well, and there's going to be a lot of rhetoric from this point forward that's going to flow around the election. So we could see some definitely kicked up volatility as we go forward. Let's go ahead and look at the charts, see what they're telling us for Thursday. Reviewing the WaveTech database, very little is going on here. We're seeing a continuation of the rotation on the short-term models. Just like yesterday's run, we saw about the same amount of new buys as sells. There was a slight positive rotation on the 1.2 model. There were 284 new buys versus 222 exits, given a ratio of 1.28, which is slightly positive. And on 3.2, it was 153 versus 311 sells. It was negative 0.49 ratio. All this represents as part of that rotation that I've been talking about and the shifting in the database. We still remain at 78.34% bullish. Even though we're likely to go into a new high on the S&P, we're still going to see a rotation and a possibility of seeing a liquidation in the short-term phase of the models. On an intermediate level, we won't see anything until next Monday, and I do expect that to remain very stable. Beginning with the S&P futures tonight, we're seeing a very quiet session, only 58,000 contracts traded so far this evening. We're right now about an hour and 15 minutes from the London opening. Very narrow range, trading from 33.63 to 33.75. My expectation for today, we're going to see an S1 R2 day, and we could see an explosion if this news comes out very positive. And since we're at an all-time new high, we could see a breakout and move to these upper levels of R3 and the RXT, which is 3406 and 3418. In yesterday's action, we did see a close above the RXT 3367.75. The high was 3382.50 and the close was 3370.00. So that is above that RXT number. And the rule on the market grid is that if we close above that level, we will get between 2 and 3 days of sideways. And what sideways means is that we'll trade within the grid. And so that would just mean an S1 R2, or it could be a S2 R1. Thing that's going on in the cash market that I mentioned in the opening comments that I think we're going to continue higher is this upward slope in the market grid. And that upward slope suggests that we're going to move up in that market grid. The range projected for today is a minimum. R1 is 33.89. It will take that out, no problem. 33.87 was yesterday's high. Most likely we'll see an R2, R3, which would be a test of 3400 and a possibility of going as high as 3409. A lot of times when you see a break over those even numbers, you'll get a little bit of a surge. The extreme is 3418. There's a high probability that we will at least print up into these numbers. And the thing that I'm going to be watching, and if you're not following me on Twitter, follow on Twitter. If I see anything strange going on with the reversal after making a new high, if all these events happen, I will let you know that there is something there. I'll be watching the market grid that you see on the screen right here, which is for the cash. And so expect to see a minimum of R2, which would be 33.99, the old high 33.93. Most likely if we hit that number, we're going to test 3400 and move up into R3 and possibly into the RXT for the second day in a row. The close tomorrow is going to mean everything. But two events need to happen. One, we need to take out 33.93, print R2 or something close to it, and we need to close under 33.71. If we get that type of action, that will suggest a minor reversal and we'll see more downside. Right now, based on the PPMs and the configuration, that's probably not going to happen, but that's something to watch for. Pay attention to the patterns that set up here. This is the most critical point in the markets that we've been so far in this rally. As we look at the NASDAQ futures, overnight we're seeing a pretty narrow range. We're looking at 11,094 to 11,150. Looking at the grid, R1 is 11,192, S1 11,059. We're trading in between S1 and R1 right now on the futures. We are seeing the PPM starting to turn down here. We're still positive at 0.19 and 0.27. What that suggests is that the 11,068 is a substantial support number on the NASDAQ. This is NASDAQ futures, and as long as they hold above that level and close higher today, we will see a continuation of this pattern. But once again, this leadership change that I've been talking about, we saw the NASDAQ up over 2% yesterday on the cash, while the S&P was up 140. Russell was only up 0.5, so some of that leadership was given back, but overall, the spread charts continue to show that bottoming pattern that I've been showing you over the past several days. Next market I'll cover is gold. Gold appears to be in quite a bit of trouble from a technical viewpoint. We've seen the moving averages start to roll over. The 10-period moving average is actually negative right now, and the PPM2 is at a plus 0.24 and PPM3 at 0.25, but we continue to trade under the value of the 21-day moving average, which is 1951.50. As long as we remain under that level, that's going to be a problem, but most likely what we're going to see going to the market grid, we're going to see an S1, maybe R1. It's possible to print an R2 at 1990, but that's a big order right now. Looks like this market is going to be very quiet, consolidating, and the risk right at the moment is to the downside that we could move toward that 1886 again. We're looking at S3 today at 1885. So this is going to be a pivotal day after the reversal pattern that we saw off the extreme lows of last night. We need to see some follow through. If we happen to close higher today, then we're going to move up into the grid, up toward the 1990 and possibility of printing up at 2000. So today will be a pivot point. Any extreme weakness down to 1907 to 1885 would be a point where you could play this from the long side, as I believe we're going to stay in this pattern, and primarily because the PPMs on PPM 2 and 3 are still very positive. It's going to continue to keep support in the gold. This weekly pattern is much more dramatic, though. We still have strong upward bias here. The 10-week moving average is currently at 1867. We printed 1874 last night, had a nice bounce off there. As we look at today, continuing to trade down on that weekly level, down toward that bottom end or the STX on the market grid at 1929. And on the daily chart, a move down below this level down to 1907, anything under 1900 will be a great place to take a position, looking for a move back toward 1990 to the 2000 level. Now, if we look at the weekly market grid, R1 is 2051. That is probably not going to happen this week, but with the high level of volatility, we could see a surge. If folks start to think the market's turn around, there'll be a stampede back in this thing. I would not be looking to play this market from the short side. I still think generally the weekly and monthly and long-term trends are still bullish, so I would look to play this market from the long side. The next market I'll cover is silver. This is continuing to be a very interesting chart from the standpoint of the configuration. As we look at the market grid, the low is 25.35. S1 is 25.24, R1 26.71. The resistance at 21 level will be substantial. The next level, as I mentioned on R1, would be the 26.70 level, and there's certainly plenty of volatility to get this market to trade S1, R1, which is 25.24 to a 26.71. That's $1.50 range. I would be very cautious with silver trying to trade this thing intraday, as the volatility is still too high. But if we do see the markets remain above S1, then you could look for an R1 print, possible to get back above that 26.20 level and ultimately print up towards the 27.50 level. But this is going to be a very volatile market. It just doesn't trade as clean as the gold market does. Doing a final review of the weekly chart on silver, the STX is 2301. So far, we're seeing a low of 2358. And as long as we stay above that 2300 level, we'll most likely continue to trade in this broad range. S1 is actually resistance now at 2647. We have several numbers, 2620, 2647, and that 2674 number. All of these numbers are going to be on the upside, are going to be major resistance, and we're not likely to get above that level. You can see here on R1 on a weekly would be a rebound back to 2860. I don't see that at the moment based on the configuration on the daily charts. This is the end of tonight's video. I want to thank everyone that came to the live stream yesterday. It was great fun as always. We'll talk to you tomorrow night. Thanks for watching.